Hello, hello. Welcome. If you have any questions about Canadian investing, personal finance, how to become financially independent, all that good stuff, let me know. Oh, dropped off. Hello, hello. Nigat says hi. Well, hello. Let me know if I can help with anything with Canadian investing, personal finance. I can look up a couple of stocks for you. If you have any questions about taxes, I'm not an accountant, but I can try. Yeah, anything year end. Today's the stocks tanked. Yes, on both sides of the border. All it took was the US Fed saying that they're going to not lower interest rates as much as the markets thought. That was sort of priced in, and boom. Yeah, well, it happens. The stock market was higher because they thought that it would be 4 interest rate cuts in 2025, and they were told 2. So obviously, higher interest rates are bad for business, bad for consumers and demand because everybody's borrowing. Um, so yeah, expected lower earnings, etc. So I think it'll recover and keep climbing, obviously, but it happened today, unfortunately. The quarter point cut was expected, so that happened. Last week, Canada cut 0.5%, so we're way lower interest rates than the US because our economy isn't doing as well. But yeah, Alex says I'm good looking. Well, I appreciate that. Not really here to market my looks, but I do appreciate the compliment. It's more about investing in personal finance. So I I do appreciate the compliment. However, I do have a 4-month-old puppy that is wandering around. So if I'm turning around and looking, jump up. Hi, babe. Oh, her name's Goose. So, Alec, I appreciate the compliment, but we're not going to talk about that. So, unfortunately, I am going to block you. What is it? Can I? Her name's Goose, by the way. She likes to be inside because it's cold outside. So Nigat says bought BCE and keeps going down. Yeah, you and me both. I'm gonna be getting quite a bit more on Friday because I use options. I sell put options. But yeah, like I think it's a long-term hold. They've done some. I don't know if they're questionable. I know why they bought the American fiber company. They're trying to grow their way out because in Canada it's very hard getting additional customers. So they went to the US. The Canadian banks have been doing it for ages. The problem is they already had a lot of debt. They sold that sports franchise, and that was supposed to pay off debt. And while they were arranging that sale, they were already in talks for that purchase. So that sort of doesn't, like, I know the CEO will basically keep things under his or her hat, but yeah, it doesn't really make me feel confident about the management. But if that works out, and they will have to spend more money in order to update their technology and so on. But if it works out, then that's the way that they're growing their business, because they're getting more customers. So anyways, time will tell. I don't know. It wouldn't have been what I'm doing or what I would have done if I were the CEO, but I'm not, and I can see why they did it. So, Soleno says cult two. I don't know what you mean. Nagat says, is there an end to the downside of BCE? No, it could keep going down if they keep doing things that the market doesn't like. They already said in 2025 they wouldn't keep increasing the dividend. I wouldn't be shocked if they cut it some. The market might actually appreciate that and see that as a positive. They really need to pay down the debt, and they didn't buy, was it Ziply? They didn't buy that US fiber company all that cheap. And of course, they're adding to the debt. So I'm glad they sold that sports franchise. I know it wasn't just a soccer team, it was multiple things and shares in sports teams and so on. It's good for advertising and image and so on, but you know, it wasn't a core business. So like, I do appreciate that they sold that off. But they probably should have paid down the debt. But then again, nothing would have happened with the company. It would have just sort of stayed flat. Nothing good would happen. So this way, they kind of rolled the dice, and if they do it right, I just feel they bought the first company that. Why am I getting? Why am I getting unrelated people? Nigat says, how will Trump's 25% tariff affect our stocks? They will go, they'll go down. Oh yeah, if the 25% tariffs happens, that will affect GDP on both sides of the border. It'll be a bad thing. Sort of my thought is that Trump is just using it as leverage, and he's rattling a saber, but he's actually not going to do it, because like, he just alienates allies, right? I mean, that's Trump, but so yeah, it would definitely be negative, because it would lower the amount of demand in the US for Canadian products, because the Canadian products would be more expensive. The tariffs get paid by American importers, which people and/or Trump don't seem to realize. But what happens is they pass that on to the consumer, and then the consumer doesn't buy Canadian products, and then the consumer has to buy American, which is likely more expensive, so it leads to inflation, and definitely hits Canadian producers. So it wouldn't do any good for our dollar either. So all sorts of bad things. So yeah, it would definitely go down. Bad for our oil stocks. I do have quite a bit of oil myself, by the way. If you guys are interested, CanadianMoneyTalk.ca, or you can look at my portfolio. I posted it there. So I have pipelines as well as Suncor, CNQ, Cenovus, and what's the last one? Anyways, so I do have I do have quite a bit of oil, but also renewables. I sort of hedged my bets a little bit there. See, the thing is, price of oil is determined by the world, not just by the US. Trump is drill, baby drill, so he might actually create more supply, which would lower the price of oil. So it's really hard to say what will happen and how things will respond. Oil's already down, red, red, red. It wasn't down that much. It was sort of hovering, yeah, high 60s, low 70s, right? It's sort of been bouncing around there. I mean, Canadian companies are profitable past about 30 a barrel. So if she's playing, so yeah, if the price sort of stays here or goes up a little bit, like we're still doing okay, there's no problem. But yeah, it's hard to say because the US is sort of a significant producer now of oil. Yeah, it's kind of since September, it's been bouncing around the high 60s, low 70s. So I don't know if it's gone down significantly. Since November, nothing significant. It's sort of doing this. So anyway, oh hey Ethan, hello. What happened to the at the end of the day today? Yeah, Jay Powell, when he was making his remarks, they cut the interest rates in the US by 0.25%. That was expected. But he made it sound like instead of the 4 cuts, which the markets were expecting in 2025, that they were only going to cut 2 twice. So it's a little surprising. I didn't listen to his speech, but or his question period, but it's a little surprising that they would be specific. Usually they just say they're data dependent, which I think they always are. But yeah, the higher number of cuts was priced into the market, and that means the market sold off because we're not going to have that many. And lower interest rates benefit consumers. They benefit companies that have debts. Like that's why everybody's watching interest rates, because it does have a big impact. So yeah, Canada sold off as well because we're sort of tied to the US in terms of trade. And yeah, we'll see what happens tomorrow. But the markets were doing fine until 2 p.m. and then whoop, 2.5%. But I mean, it's not a disaster, right? So we'll see what happens. The 2 things I've sort of been playing with, one is BCE, and then the other one is TD, Toronto Dominion. And TD is recovering nicely because they don't keep doing weird things like BCE, but BCE keeps sort of heading downward. So I'm buying more. Like they're not going to go bankrupt. At worst, they're going to sell off at 70 cents on the dollar. But anyways, Brett, I think, is trying to be. I have a serious buying opportunity for meme cult coins right now, but my girlfriend wants me to buy her a new hairstyle. What do I do? Well, we're gonna block you. But yeah, no crypto of any kind, and I'm not going to comment on your girlfriend's hairstyle. Like usually on YouTube, I seem to be getting fairly on topic questions, but I've already had a couple of folks which seem to be more interested in my physical attributes than investing. So I'm not quite sure why that's happening this time around. So Nigat says, and sorry if I'm not pronouncing your name well, have you invested in Tesla and Bitcoin? Big things. What does it say? The two big things right now. So no, neither. Bitcoin crypto is total garbage. Like that's going to zero. It's just something somebody made up and people started believing in it. You can certainly make money at it, but it's worthless, like completely worthless. It shocks me that people are doing that. I guess I shouldn't be surprised, but it's like it's ridiculous. Tesla is overpriced, always has been. I don't really enjoy Elon because he's just a loose cannon, and that was even before he got in with Trump. Like General Motors and Ford. Ford hasn't been doing all that well, but GM I put a lot of money into. Tesla is all trading on sentiment. What amazing things they're going to do. And when you look at self-driving, for example, Google is doing way better and way ahead of what anything that Tesla's doing. Tesla doesn't really make great cars either. So no, absolutely not. Absolutely not. Like I had the opportunity back in Vancouver. I moved to Edmonton 6 months ago, but back in Vancouver, a friend of mine bought a brand new, let's say Model 3. It was 70K. And he's like I was expecting a luxury car for 70K, and like this is bare bones. He and I drove around with gloves on and like jacket zipped up because he wouldn't turn on the heat. And this was in Vancouver. I cannot imagine in Edmonton. He wouldn't turn on the heat because he says the battery goes like this. So I don't know, like it was powerful, but I mean so many cars are, and like it wasn't anything magical to me. My friend didn't even figure out on how to make it act like a regular car because of the what's it called, the braking being regenerative, was the word. So like it took a little while to get used to it, and I'm just like, when I press on the brake, that's when you do the regenerative, and then when I press it hard, then that's when the actual brake pads should apply. Like, why can't you set that? Like, why am I learning how to brake with the gas pedal? Like that, to me, that was sort of an odd thing. Ethan says we kind of need a bit of a pullback. Yeah, not so much in Canada. In the U.S., I would argue the market's been overpriced for a long time. The PE is quite high, but the thing is, like, it all gets sort of priced in, and now you also get the weird good news is bad news. So what if now they get higher unemployment than expected? Then that's actually going to be a positive because that will mean that there's going to be more interest rate cuts in the US. It's really sort of an odd thing with the interest rate cuts. The US economy is doing quite well. Canada not as well, but we're nowhere near a recession. So kind of an interesting. Nigat says both going up and up, talking about Bitcoin and Tesla. Yeah, that doesn't mean that's what I want to invest in, right? I like crypto is worthless in general. Like blockchain technology has been around now for like 10 years, and I haven't really heard of any good use for it. Like it's a technology, so like I've sat in on seminars where people are like, well, you can validate resumes with it. I'm just like, okay, but like it's a it's a solution in need of a problem. It's like, well, we've got this technology, okay, let's use it for these weird things, but like it's not a serious need that we're addressing. It's just because it's there. And then crypto is completely made up. Some of you from TikTok lives who are on here, I'm going to bore you, but like if I took a sheet of paper, ripped it up into 1,000 pieces and said, this tiny piece of paper is worth $1, and somebody says, no, I think it's worth $2, and somebody else sees that, oh, it's going up, I'm willing to pay up to $4, and I'm going to sell it for 8 or preferably 16. So that's exactly what Bitcoin is. But because of the magic around it, and we've got, and I understand what it is and how it works. Like I get it. It's just like there's nothing underneath it. Just like the little pieces of paper. Now, if I did that, people would think I'm crazy and would laugh at me. But that's exactly what people are doing with crypto. The only difference is that people believe in it. And as long as somebody jumps onto my lives and capital letters, crypto to the moon, and it's like, yeah, if you like, and of course, then when the ETFs came out, it gave it validity. But at some point, people are going to realize, yeah, like there's nothing there. Once we stop believing in it, and like you need to keep getting tulips in Amsterdam is exactly right. Yeah, yeah, the tulip light bulb, not light bulb, the tulip bulb craze in 1600s. Like everything. Goose, hey, where's your toy? She's digging up the carpet. Sorry. Um, like everything has some sort of an intrinsic value, like some utility, right? Real estate you can build on, grow food on. Um, Gold, I don't touch either because it has very limited utility in industrials. If somebody made me pick a metal, it would be silver actually. Um, so yeah, but gold at least has $5,000 of history, while crypto is just like the mystery of the guy who invented it. If I were him, I would have put in a back door where, I can create an extra million Bitcoin just for myself, for the trouble. The whole halving and the mining, like using computers and energy to do completely pointless tasks, just seems so dumb. Like this has to be some sort of a social experiment. Like I wonder how many people I can get to believe in this crap. Like somebody's gonna come out and just say, yeah, this has all been a great joke. What are you eating? Okay. Anyways, yeah, say hi to all the people. What are you eating? Oh wow. Oh, and it's stuck. She managed to pry off a piece of her toy, which I thought was indestructible, actually. So yeah, so I beat Bitcoin to death there. Tesla, definitely not good for Canadian weather. Anything with batteries, thank you, is a bad idea. Um, Need to go outside? Good girl. Okay, good girl. Apologies. Yeah, just with Tesla, I think I sort of said my piece. Like I don't, what's their PE now? At one point it was 500, then it was sort of coming down. And just when it got into the 40s where I'm sort of accepting, it shot back up again. Like it's all trading on sentiment, 131. Like it's all trading on sentiment, just expectations of better future and the amazing things they're going to do. And they're a data company, and they're they're a technology company. I hope they are, because they don't really make great cars. Like us, maybe they're a status symbol or something. So, that Ryan. Okay. Hi, Ryan. I know Ethan and Ryan under different names and different platforms. So, well, thanks for joining. No, long time no talk. So, yeah, that's sort of my 2 cents worth on Tesla. Like, for me, there's so many opportunities out there that it's really easy just to say no to stuff. So like I don't do gold, I don't do crypto. I try to avoid commodities, although oil I'm being opportunistic on. And I bought some Nutrien for the potash, just for the farming aspect and food growth. So I try to avoid commodities because companies are price takers and they're just competing on their cost of production. They're and they're always going to have fairly low margins because there's nothing preventing people from, or like other companies from coming in, and they're getting the same thing that the guy down the road for whatever they're getting out of the ground. So I try to avoid commodities, like I said, opportunistic with the oil. I don't do airlines. That's another fairly easy one because it's just such a bad business. So I saw Air Canada was having some issues. So, speaking of issues, not that I want to do political too much, but and again, not that I love Trudeau, but he's been having some issues. He was slated to lose the next election already, and then Chrystia Freeland quit on him because he wanted to shuffle the cabinet. So, eek. Yeah, you're right. Yeah, no retail. Generally, just because they have low margins, and generally, again, not much in a moat, like an economic moat, something that's preventing competitors from coming in. So, yeah, like for me, I think there's enough stuff out there to invest in that if there's just something that's not that great, I can easily make that decision and look for something better. Like Warren Buffett says, you don't have to swing. Like it's like a baseball game with no called strikes. You don't have to swing. So like, why force myself into Air Canada or something if I don't think it's a good business? If I were to buy an airline, if I was forced to buy an airline, it would be an American one, I would think. They just seem to have an easier time of it. So, anyways, yeah, interesting day today as well. I like, what are the coming back? I try to get her to go for a run with me today. The doggo, she's 4 months old, so she's puppy, but I tried to get her to go for a run, but it was like -20, and she was just not having any of it. So I had to come back, and I went for a run by myself in the snow, which is definitely tiring. Actually, looking at the futures for tomorrow, they're actually green. They're actually green. So let's see if that hangs on. So yeah, any questions, any comments about? I mean, we've had lots of stuff. We had the Canadian central bank cut last week 50%, which was sort of expected. Sorry, 0.5%, 0.5. So that was good. I think they're going to cut them. I would expect to cut maybe 4 times until they get to maybe 2.5%. Oh, excuse me. I have to dry her off. Hi, babes. Is it still snowing? Oh. Free. Um, yeah, all the U.S. indexes were futures for indexes, meaning trading in China and where it's where the markets are open. Everything was green by a little bit. So uh, they have the S&P 500, NASDAQ, Dow Jones. So all of that looked like it was optimistic for tomorrow. Theoretically, the futures are where the market will open tomorrow in the US, right? They're trading while the US is shut down. They're trading the futures, and theoretically, they trade throughout the night. And then when the US opens in the morning, they should start where the futures are. From there, it could move in any direction. Ryan says thoughts on Loblaws. Well, that would be the Loblaws. That would be the retail. Grocers especially, like the margins are terrible. It's just it, like it doesn't matter whether I buy my vegetables here or there. Like they're still the same vegetables. Like you're competing on price. You're not competing on quality. Compare that to Microsoft, obviously completely different, but their margins are high because because they've done something which is not replaceable. And I've said this before, but if Microsoft said, well, now we're charging an extra $5 for Windows licenses and for Office and everything else, like what are all the corporations that are using them going to do? Like from an IT point of view, having worked in IT, like the cost to get somebody onto Apple, which would be even more expensive, the costs and retraining and help desk would like just like, no, we're paying the $5 a year, right? And that goes straight to the bottom line. Anyways, I digress. So Loblaw's 26 for PE for a grocer is a bit high. Yield 1%, so they're not paying much of a dividend. They've certainly had a nice long run up. They certainly have. Oh, every time it's quiet, I'm afraid that something's getting chewed up. Oh, she was upstairs. Great. Yeah, profit margin is 3.5% for Loblaws. Let me check what the average PE is for average 5-year PE for Loblaws. Oh, she brought something. What did you steal? My God. Median PE is 21.8. And right now, I said it was 26. So it's, yeah, some of the run up hasn't been due to increasing earnings. It's just been multiple expansion. So it's a little pricey. It's definitely had a nice run up, but it's a little bit pricey. So yeah, Loblaws, I wouldn't be buying myself for various reasons, but like they're not paying much of a dividend, and they've had a long run up and they're pricey. They've had like a 4-year run up since January 2021 by the looks of it. More like tripled in price. Wow. Okay. Nigat says, do you buy Canadian hedged US stocks or you buy US stocks in US dollars? Yeah, good question. So I used to have US investment properties, 4 of them, 2 in Vegas, 2 in okay, now she's got her toy. 2 in Vegas and 2 in Arizona, and so I would get U.S. rental checks in U.S. dollars. And then I sold one per year, so I got the last one sold in 2023. Good riddance, frankly. Made a ton of money, but I did not enjoy owning them. So I would have US dollars. So every time I got a rental check, it would accumulate until I had 5-10 grand, and then I would buy the real deal in US dollars. Um, the CDRs seem to be popular. Those take out the fluctuations, as you say, Canadian hedged. So if you have Canadian dollars and you just really want the stock fluctuations without mixing in currency fluctuations, then CDRs are great. I've never used one, but when I did get US dollars, I bought the US stocks directly. Now, if I sell one of them, like I own shares in BMW. It looked like they delisted the ADR, so that was the American Depository Receipt. I suddenly had 10,000 US in my account, so I bought Google and done. They pay the stuff that I own in the US is not intended to pay dividends. My Canadian stuff pays dividends in order to be tax efficient in my non-registered account. So they pay Canadian eligible dividends, but the US stuff, I'm not looking for dividends. I'm looking for capital appreciation because it's more tax efficient. But they do pay, let's say, 1% on the average. So, like, again, when it accumulates to 5-10 grand, then I'll buy something else. But I sort of stick to what I have unless forced to sell something when I stop believing in it. Nigat, so your situation was different than any Canadian. I'm sure there's some Canadians that get US dollars coming in. The CDRs have been around for maybe a couple of years, so I mean they're great, right? You could pay the 1.5-2% to convert Canadian dollars to US dollars. If the stock appreciates, you'll forget about paying the 2% for the currency conversion. But yeah, I mean it's not great. The 2%, like I had a Canadian dollar account, but I would buy US stocks in it before I knew better. And immediately I was behind 2%. And I'm like, did this stock just drop 2%? It's like, no, Q-Trade is charging me 2%. So I don't know if it's any different. I think I'm more tax aware maybe than I should be, but my TFSA is maxed out, my RSPs are maxed out. For my business, I still have a corporation. I'll have it till the day I die, because you can't close it out without tax consequences. So most of my stuff, vast majority of my stuff is in non-registered. So I'm really trying to either get Canadian eligible dividends, which are taxed lightly, or capital gains at least. I'm trying to avoid interest, foreign dividends. So, yeah, I mean, everybody sort of has to tweak their own portfolio. So anyway, Nigat says, what US stocks have you besides Google? So go to CanadianMoneyTalk.ca, go to my portfolio, and you can take a look at my whole portfolio. I exported out of Quicken because unfortunately I have 3 different brokerages. I'm going to do a YouTube video, I think on the 28th of December, summarizing my whole year and kind of going over all of that. But hold on. So like my favorite stuff that I'm hoping to hold forever is Microsoft, Google, and Amazon. It's stuff that I don't have to worry about, and if something drops, then I'll buy more. But let's see. I'll read something off to you. It's fairly simple to follow, I hope. So I have Accenture, ACN, which I got because I worked for them. They're a consulting company. I worked on in IT. I've got 3 Chinese stocks, which one of them actually Tencent has recovered. The Alibaba and Baidu are still doing bad things. Alphabet, Amazon, Bank of America, Ford I mentioned, GM I mentioned, JP Morgan, which has been doing great, especially after the election. MasterCard, I've got a little bit of Pfizer, which hasn't done great. Taiwan Semiconductors. I had NVIDIA and it just got too expensive for me some time ago, so I sold out. I just don't like something with a high PE. It fluctuates so much as well. Because there's so much is like sentiment, like people's feelings. And whenever you get feelings involved in investing and it's not based on fundamentals, not to say that NVIDIA is a bad company. They're absolutely not. They're not like a meme stock or anything. It's more that people are expecting great and amazing things from them. And so like they make their numbers and the stock price goes down because they didn't do amazing things that particular quarter. Like that's got to suck for them. So Taiwan Semiconductors, because of the political situation with China, isn't as overpriced as Nvidia, so them I'm holding on to. Cigna, which is health, Walt Disney, United Health. I'm sorry, that was the CEO that got killed, unfortunately. And apparently it's come to light that they deny claims, which like every insurance company does. So they've been taking a beating. I'm still up for them though. And then WPP, which is kind of marketing company. That one hasn't done very much for me. It'll be very much the same in the corporate one, except I have Nokia, the cell phone company, which I bought when it was paying a dividend and for a 5G play, and that hasn't played out, but I'm sort of flat on it. So those are my US stocks. You know, so how I structured my portfolio, and again, take a look on CanadianMoneyTalk.ca and my portfolio is the heading. I want to have dividends coming in. Okay, so those are going to be Canadian eligible dividends from Canadian companies, and half my portfolio roughly is in that. Okay, US stocks I'm comfortable doing research on. So those I own directly. I'm not avoiding dividend payers, like Pfizer pays a hefty dividend. But I wanted good companies, and I'm hoping to get capital gains, which are taxed at half, as long as I don't go crazy and sell $250,000 worth of stuff. And then the remainder of the portfolio is either through mutual funds or ETFs, is covering kind of outside of US and Canada, because either I'm okay just with an index, or I want actively managed where somebody does research on Japanese stocks, because I don't really have the ability, the information, language skills in some cases. So anything, and I'm a big believer in emerging markets. So, I'll do that through ETFs or through mutual funds, even though I think a lot of my mutual funds are more in developed markets, but outside of North America is what I was going for. Emerging markets, I'm a believer because of the demographics, young growing population being pulled out of poverty, that kind of thing, working for a long time. And also the application of technology being like low-hanging fruit in a lot of these countries. While in developed countries, they've squeezed as much out of automation and out of technology as possible. So, yeah, so anything further afield, I'm doing either through actively managed mutual funds or through ETFs. So those are kind of my three buckets of stocks. One to sort of live on, another one to be in the US, and another one to diversify and to play the long-term demographics game is the third one. So I guess AI would be one thing which I'm sort of still scratching my head about. A lot of people see it as a done deal and something amazing. I see it as amazing, but in about 5, maybe 10 years. Excuse me. Goose, what are you barking at, babe? Goose, come hang out with me. Come on. Hello. Hello. So yeah, so far it's been the picks and shovels, the people making the hardware that have benefited. I'm still not completely sold on actual improvements in people's performance, efficiency, and so on. So I think we're going to realize that, okay, we have enough chips now. Now we need it to actually improve. Ow! Stop it! You're embarrassing me in front of the people. The 5 people that are on. So yeah, that wasn't the main reason I sold out of NVIDIA. I just, like, NVIDIA had benefited previously, the Bitcoin mining, the metaverse. Who remembers the metaverse? Ow! You can go back to barking out the window then, if you're gonna bite me. She like bites me all the time. Sit. Good sit. Good girl. Okay. No, those are mine. I need them. When she bites my nose is the worst because I only have one. I don't have any spares like fingers. Nigat says, what US insurance stock do you hold? I know you like MFC. Yeah. I again, because of the taxes. Now, the saying is, let me make sure I get it right. Don't let the tax tail wag the investment dog. Like, don't let the tail wag the dog. Because, like, don't pick stuff that's tax efficient if it's gonna not perform. So, just make sure you pick good companies in Canada in order to get the tax benefits. Yeah, no kidding. She's gonna. You had an accident. Yes, you're okay. You're okay. All right. All right. All right. There you are. Okay, here's your toy. Yep. I know this is fascinating. So, U.S. insurance, I mean, I have the couple of health. I have the Pfizer, the Cigna, and the United Health Group. That's health though. United Health, I guess, is a health insurance. I mean, I got JP Morgan and Bank of America as far as banks. I don't go out of my way for I don't think I have anything specific US insurance. So I did stick to Manulife. I also have Sun Life, Great West Life. Like in Canada, we don't have all that much. So Manulife has done amazing for me because I stuck to it. I kept buying it while it was in a price range for years, and they kept paying the dividend, and they were in the penalty box because they almost went bankrupt in 2008, and they just stayed in that trading range, and they were perpetually cheap. And value investor, I kept buying them, and then they finally year and a half ago, they finally broke out. And yeah, so they're my biggest holding. Yeah, I don't think I have much else in the US as far as insurance companies. I would have to look for Bank of America, and I don't think JP Morgan does insurance. Maybe Bank of America. I wouldn't think JP Morgan would. In the US, insurance is bigger than in US insurance is bigger business than us. Okay. I'm sure it is. Yeah, just because they have 10 times the population. Oh, maybe not. We hit 40 million in the US. I think it's still around 340. Isn't that a kind of a strange thing though? Like the developed world, like the population isn't growing. Um, if it wasn't naturally just through birth rates, if it wasn't for immigration, US and Canada wouldn't be increasing in population at all. And then you look at Japan, which I completely avoid. That's another of my don'ts to add to Ryan's addition. Because they are, and having traveled there, I know they don't like foreigners. So they don't do immigration, and their population is old and decreasing. Like, where are you going to get growth from? Like, how hard it is for a company to increase its sales and earnings if the population isn't increasing. Like it's a lot of work to get additional customers away from previous customers, as we're witnessing between TELUS, Rogers, and BCE in Canada. That's why. So I'm going off on a complete tangent, but that's why BCE went outside of Canada for new customers, because getting somebody away from TELUS is really expensive, and you have to give them a cheap plan and all that. So anyway, so yeah, I don't. I'm sure insurance is a much bigger business in the US than it is in Canada. I mean, everything is times 10 in Canada. Sorry, in the US than in Canada. So cool. Any other questions? Personal finance, Canadian investing. I can look up a stock for you if you like. Otherwise, I can have an early night, and me and Goose are gonna go watch a movie. I'm also working on my corporate taxes. I saw an email from my accountant saying, "Hey, when are you gonna send me your stuff?" I'm like, I got a dog. I can't leave her alone because I need to open the door to the patio for her to go outside. And so, like, to be in the office where the main computer is, I'm just fiddling on my laptop here, and this is on the phone. So yeah, I can't leave her alone, and I can't work in the office on my taxes. Ethan says, are you still liking GSY? Yeah, I added to it a little while ago when they had a sharp drop, when I think they needed to release preliminary earnings because they wanted to get a bond out, I think it was, and it was a bit of a surprise that they released it, and because they couldn't just give it to the bond company, they had to release it right to everybody. So nobody was expecting it, and it wasn't maybe as good as it could have been, and so it dropped. So I bought a little bit then, but that's about it. So that was GSY. Sorry, so yeah, I'm not adding to it, but like I still think it's a great company, and there's lots of growth, and at the same time it's cheap. So Nigat says, sorry, I skipped ACMR. Let me take a look. ACMR research. So I've never heard of them, so it's just going to be the numbers, I'm afraid. Market cap is under $1 billion, so that explains it. Development, manufacture, and sale of single wafer wet cleaning equipment. Supplies process solutions that semiconductor manufacturers can use in various manufacturing. Oh, it's for semiconductors, okay. Okay. Price to earnings is 11, so for basically a technology company, that's not bad. Return on equity is 10. I prefer 20. Do they have, so one of the nice things about Q-Trade is that they get Morningstar research, and Morningstar has a concept of an economic moat, whether there's something that excludes competitors. And ACM has none, no economic moat. So basically, with enough money, I could start up a competitor, slightly underprice them, and drive them out of business. So I mean, they've certainly come down. The PE could go into single digits, like just sort of eyeballing it. Stop eating the chair, please. Go get your toy. Go get your toy. Don't eat my chair. They could go down some. I mean, usually single digits is sort of high single digits is where it stops. I would start if you like it. It looks like around 10 bucks was where they bottomed out in 2022. That might be support. Hold on, scrolling back up. Ow. So maybe if you like them, I would maybe buy a third of a position, and if they keep going down, then keep buying more. It looks like there might be support. I'm not a huge believer in technical analysis, or charting, but you know. So it looks like it could go down some more, but I mean, the PE is getting pretty reasonable. The business sounds cool. The fact that they don't have anything that separates them from competitors is not great. So that was that. SMCI stock thought before you go, please. As long as there's people asking questions, which I did get a whole bunch more. So SMCI, is that the one that had the? Yeah, okay. So they had their auditor quit on them in protest. Oh, all right. Doesn't want to go outside, which I don't blame her. It's -20 out there. I don't own them. Like it seems. Was it them? Hold on. So I'm not telling you the wrong information. Some CI auditor. The recent search after SMCI cleared all the compliance issues. Yeah, like people thought like this company is going to get delisted and stuff like that. I'm like, yeah, they just need to straighten this out and become compliant. Like it's not, like the company is not going to disappear. Hi. Let me go back to them. PE of 16. So I mean, they do feel inexpensive from that perspective. I would love to know what made the auditor quit. Like their sales are definitely increasing, so they're a growth company. Yeah, they don't seem expensive. So are profits, by the way, like doubling year over year, more than doubling in some cases. Wow. Might be an opportunity. They've certainly come off some. Even quarter over quarter, the sales are increasing. Like, yeah, to me, it feels like an opportunity. Yeah. Sharon says outside, please. I'm assuming that's the dog. Ryan says, are there any names you're planning on adding to? Yeah, I sell puts on, let's see if I can find it. On Friday, it was the first Friday of the month, I sell puts, which are basically promises to buy something. Are you going outside this time? Okay. Sometimes I think she does it just to annoy me. First Friday of the month, I sell puts, which are promises to buy stock. So I sold it on Northland Power, Telus at $21. Algonquin, which is, yeah. Canadian Natural Resources, and then Toronto Dominion, and then a second one on Telus. Oh, that was an earlier one. So yeah, all the stuff that I read out, I'm on the hook to get if the price comes down, and in some cases it already has just in the week. So I'm not planning on adding to them. I would like them to go up. I also own them already, so I would benefit from it going up. But that would be something that I would get more stock and take possession of it. Nathan says, I'm about 33, and guys, I've fallen a little bit behind, so just be patient. Nathan says, I'm about 33. I've been playing around with dividend calculators. My goal is to have my TFSA pay 100,000 K in dividends annually by the time I retire. Okay. That would be quite the portfolio. So I mean, 4% is like a decent dividend. So working backwards, 100,000 times 25 would be your 2.5 million. Yeah, I hope that happens for you. It would be a bit of a stretch. In 30 years? Okay. I mean, it would be a lot of money that like you would have to max it out and it would have to do pretty well. You can probably see what sort of a rate of return you would need to get for that to happen, right? But yeah, at 4% to get 100K, and in, excuse me, in 30 years. Hi, babe. Okay, don't run away. Free. In 30 years, 100K won't buy as much as it buys today. So just be aware of that as well with inflation. So yeah, I'm sure using the same financial calculators, you can probably find out what kind of rate of return you would have to get. You can probably do it in Excel because, I mean, you're putting in 7,000 this coming year, but then it might go up to 7,500 and so on. So it's a bit of a. Okay, and then Nathan adds, but the limiting factors for my TFSA are contributions and tough choices for rebalancing existing holdings around 4 growth stocks. Is it wishful thinking to hold these growth stocks? Yeah, I don't know. I'm not gonna try to do the math on my own, but I had been investing in the TFSA since it got created 2007, 2008. And I've maxed it out each year. And from the, what is it, 95? Right now it's like 200 and change. So it's doubled in more than 10 years. So in 30 years, Yeah, that's a bit of a tall order. Also keep in mind, you're looking for total return to be maximized. So if it's dividend payers that maximize, and you're reinvesting dividends or growth stocks, TFSA has 2008. Sorry, $200,008 right now out of the 95 invested. So it's more than doubled. But growth doesn't always outperform like it has from 2008 till 2020 or arguably 2022 because money was cheap. There's other stretches where value dividend payers outperform for total return. Trying to guess which one is going to outperform next is a bit of a fun exercise. Arguably timing the market. So rotate. I'm assuming you mean rotate into dividend payers later in life. Yeah, there's also nothing wrong with selling a couple of shares here and there, right? Like make sure you maximize the total return as best as you can. Don't um, don't just think that growth has the best return all the time. And if you think it does, Goose, hey, stop destroying my couch. Like if you think growth is going to outperform, then just keep it in growth and sell a couple of shares. There's nothing wrong with that at all, right? Ethan says, "Will TELUS cut their dividend?" I think TELUS is the strongest out of the three main telcos, personally. They all have debt and they all have trouble growing because of the population thing I mentioned. TELUS, I would say, is probably the dividend is quite safe, at least the appearance of it. And Nathan says, rotate into dividends. Yeah, okay, I think I said that. Nigad says, PayPal stock is a buy right now. Let me see. And being a value investor, I'm probably not gonna love a growth stock, but I'll take a look. At worst, I'm giving you another opinion. P of 21, so that's not bad. Again, the thing is, like all these big long run-ups, like the time to buy it was back in June, not now. PayPal. Average price to earnings in the past 5 years is 32. So it's pretty cheap that way. Still, so their earnings must have come up during the last 6 months because they've had a nice run up and their PE is 21. The lowest PE in the last 5 years, it says, was 17. Yeah, so it doesn't. It seems fairly cheap. I don't follow them. I have to admit. I do have an account with them, but that's about it. Sales are increasing year over year, like clockwork. Net income, not so much. 2022 was a bad year. But otherwise, yeah, other than that, the net income is flat. Quarter over quarter, I'm not seeing a sales increase. Yeah, it's not my kind of thing, but it doesn't seem like it's overpriced. Doesn't seem like it's a bad one. What I try to avoid is something with a high PE, especially like something in triple digits. Um, a high PE, or if there's no PE, meaning they have sales and they don't have a profit. If it's a company like that, then I really need the sales to sort of be going hyperbolic. Um, then it's a growth company, and if I believe whatever it is that they're doing, then that might be something. Um, Now I've got burnt a couple of times, that I'm never going to get burnt that way again. Is I've bought stock which is a total speculation, doesn't even have sales. Nikola was the last one that a friend talked me into. And previous one to that was an Israeli company called Rewalk, which builds exoskeletons for people who can't walk. And I'm like, oh, this is going to have military applications and everything. And they never made a profit. I think they did they did have some sales. And after the IPO, I got in on the ground floor with the IPO. They went up, and I'm like, oh, I'm going to be rich. And then since then, it had done nothing but go down. And I sold out of it, and periodically I look in. I'm like, nope, still sucks. And Nikola, which is the hydrogen truck company, there was some nepotism, and they charge yeah, they charge the CEO, and I think he went to jail, like that. Just a dumpster fire. And you know uh, they didn't even have any sales, they didn't have factories, they just had a business plan. And people's like, oh, this is so great. And in hindsight, after doing some additional analysis and just over time, like, I don't think hydrogen is going to be the it, like, that's not going to be the next clean fuel. The hydrogen fuel cells, like Ballard, which is just in Burnaby, I actually work close to them. Like, they've been working on that for years, and I think they've got like a hydrogen cell forklift or something. That was the best they could do. So it's a lot of energy to get hydrogen in the first place. Now, if you have unlimited uh, energy from renewable sources, then maybe. But like, it's not. Just charge the battery and just run it that way. Um, so yeah, Nikola was just a bad idea to begin with. Um, so Ranch says, hi from Toronto. Hi, Ranch. Hello from Edmonton. Thoughts on what happened today in the markets and predictions for 2025? Sure. Um, Today was fine until about two Eastern, when predictably Jay Powell and the U.S. Fed cut interest rates by 1/4%. That surprised no one. It's always when they do the press conference and when they have their statements, and apparently the markets were pricing in 4 rate cuts of 1/4%, so one more percent cut total in 2025. And instead of just saying we're all going to be data dependent, like they always say, which they should be, uh, Jay said that they're only going to cut twice more in 2025. I'm not sure why he said that, but that really spooked the market. And Canada being not loosely tied to the US, we fell as well at the exact same time as the US. Um, is it a tragedy? No, it's just that 4 rate cuts apparently were priced in, and higher interest rates are not desirable by anybody. It slows the economy. It hits the bottom line on companies, if nothing else, for their debt. But you also get you get lower demand, because companies and individual consumers are all borrowing, so they spend less. Um, Markets dropped 2.5%. That's not a great day, but it's not that unusual. And I looked earlier at the futures where people are trading now, where their markets are open, like Asia, and they seem optimistic about tomorrow for the US. So we'll see. And predictions for 2025. Ooh, you know what? Like I don't predict numbers. Like, what's the S&P 500 going to be at? Like over time, everything goes up. Is like the kind of investor I am. People who are guessing at numbers. I know JP Morgan came out maybe to get clicks and to get attention, but they said that over the next decade, the average annual return is going to be 3% in the US. That seems low. Um, they the US is overpriced, but it has been overpriced for a long time, and it can continue to grind upwards and be overpriced for a while longer. I always kind of say 5 to 8% returns on everything for the next year. We might get a plus 20% year. This year was great so far, anyway. You could get another 2022, but interest rates are coming down. I don't. No, nobody's in recession. So I don't think it's going to be a bad year. I would keep a lookout on any of the AI plays, just because I'm still not convinced that AI is actually improving efficiency. Quick personal story. I've got like my hard drive gets backed up to the cloud, just whatever changes I've made in certain directories overnight. But just in case there's like 7, 8 files, which every so often I'll stick on a memory key. And I thought, hey, why don't I just double click on some sort of a batch file, basically like a little executable, and it'll just the files are all in the same directories time and time. All I have to do is just specify the directory I want to create on the memory key and have those 7, 8 files dumped in there. And I went to AI, which is why I'm telling the story, and I'm like, Windows batch file code, and it gave me a code which I'm just copying and pasting this into a text file, calling it a batch, and double click. It'll prompt me for a directory on the memory key. Beautiful. First thing is the directories, the slashes. If anybody's familiar with DOS, the slashes were the wrong way. So I'm like, oh, it's interesting. And eventually, I don't know whether it gave me something for Unix or what the heck it was, but like it was complete write-off. Like nothing could be used. In the end, I'm just going to edit the file to put in the hard code in the directory I want it to copy to. I've hard coded the directories for where the few files are, and I'm just going to edit it. Like it just ended up being less painful that way. I've had pluses and minuses with AI. I'm obviously not paying anything, but I don't think if you're paying for it, you're getting anything better. For developers, I still want to know whether it's improving their efficiency and performance, whether they can let 1 out of 3 or 2 out of 3 go, because that's where AI is finally going to show some value. Otherwise, the only people who've made money was the picks and shovels. You're going to get, the chip makers. Was it ASML? The lithography machines, ASML? Yes. They're making money, but I mean, ultimately, the end users need to get value. Okay, and like even the chat bots on various company chats, like I wanna chat with a real person. You're not helping me. So like Well, just like when the internet came out and everybody's like, oh, everybody's going to be selling and buying stuff on the internet. It took it took years for that to come to fruition. So I'm kind of seeing AI to be the same. So that would be one of my predictions that like people are going to discover that it's not there yet. It's definitely like when the whole metaverse thing came out, which I'm still claiming, a little conspiracy theory, but I'm still claiming. If you remember, Facebook was having all sorts of HR issues, and they just wanted to go, hey, look up here, and they're like, we're coming out with the metaverse, we're renaming ourselves. Where's your metaverse? I remember people on the news buying real estate in the metaverse. Uh, I listen to a morning fidelity seminar every morning, and they would have people talking about the metaverse, and then suddenly we're not hearing about the metaverse anymore. So like it's not going to be that, okay? Just to be clear, but I'm just not thinking it's there yet. Just from personal experience, maybe people who are paying for it. Um, you're going to have consulting companies implementing it, right? So there's money there, but ultimately, in the end, it needs to make people's work lives easier. Nigat says, so AI is not going to affect jobs anytime soon. I don't, yeah, I don't think so. I mean, the whole fear about people getting laid off in mass, I mean, that is one of the savings, uh, one of the possible savings. You could keep the same staff and just have them be more efficient and productive and make better sales and more profits. Like you don't have to um, make better profits by cost cutting because you're letting people go. Okay. MF says Canada will be happier as our 51st state. Yeah. Stupid. I can't, by the way, speaking of stupid, I can't believe that Donald Trump commented on Chrystia Freeland leaving and like just uh can't wait to pull out our protectorate. Okay, well, we still have the British, I guess now it's king, as our head of state. So Brian says so. Celestica on TSX may not be a good buy. I'm giving you my opinions. My crystal ball is my crystal ball is a little bit cloudy, I'm afraid. It rings a bell, but I don't know what they do, other than from the context. Supply chain solutions globally to equipment manufactured and service providers. Advanced technology solutions, cloud solutions. By the way, the best things for Amazon and Microsoft are still their cloud solution. So one revolution behind, still 30% annual growth or more in those areas. My last project before I stopped working in 2020 was a cloud implementation at a company that had everything locally on servers, and it was just so much cheaper and so much easier just to put all the content, all the databases, all the applications on the cloud. A little bit of security risk, but like the cloud was just no brainer as far as cost goes. So P of 32. To me, it comes down to fundamentals. Are they making more money, more sales, higher earnings per share, again and again? Like they're definitely year over year they're increasing. Well, last 3 years, let's say, in sales. Solidly profitable. Let's see, quarter over quarter. Yeah, even that, increasing sales. Profits, not so much. I would check, let's see if I can do it. Average PE. Celestica. Yeah, thanks. Maybe they're a little bit overpriced, maybe not. PE of 14 is the average for Celestica. So yeah, there's some expectations being built in here into Celestica with 32 PE. If they keep doing well, it'll grow into it. So just like Nvidia, except they're not crazy like Nvidia. Paul says thoughts on natural hydrogen stocks in Canada. Well, I mentioned earlier I don't really think hydrogen is the propellant of the future. Like obviously it's clean, but it's a lot of energy to produce the hydrogen. Funny thing is hydrogen is the uh, the most frequent element in the universe from my astronomy information. It's just getting it into your vehicle. You'd have to, Paul, I don't know off the top of my head what companies produce hydrogen. I know Ballard, which is trying to do the fuel cell with hydrogen. Like they've been at it for decades and just have made no headway and no profits the last time I looked. Nathan says on AI, somewhat agree. I'm a developer. ChatGPT and Copilot help for sure, but have ways to go. Definitely has limitations, but the more we work with the tools, the more we understand them. Yeah, I mean, yeah, I guess it's GI Joe, go garbage in, garbage out, as that was for developers back in and programmers back in my day. It'll become almost a programming language if you want to get very precise results. Otherwise, if you give it something general, it'll spit something out, and then you spend almost as much time editing it and debugging it as it would have taken to write. So, people will also have to get better at using the tools, but my point is it'll be almost like learning another programming language. So yeah, I just like ultimately it has to make you more productive, and I'm not seeing anybody. You're sort of giving it lukewarm, right? Is it worth setting up an application and paying licenses and so on? And is it worth wherever that ChatGPT is being hosted? Is it worth buying all these high-end servers and then maybe a mini nuclear reactor to power the data center? Like there's a lot of expenses, but ultimately it has to make somebody's life easier and cut costs somewhere. So, Nathan says, will be interesting to see how it evolves. Yeah, for sure. I don't doubt this is going to be significant and it's going to be revolutionary. I'm just saying that, okay, we've got the data center set up. The coding's being improved all the time. So let's see what happens. But don't forget now, it's been what? 2 years, 3 years since the whole thing broke, because ChatGPT was the first one that came out, and like all of the major companies have been working on this for ages. Also, just stupid semantics thing. Artificial intelligence is when it's able to learn and not just do Google searches, okay? It's able to learn and it's able to do something that it wasn't programmed for. Like if everybody, like this is a buzzword, right? Everybody's saying AI, but it's like, well, it's just an algorithm. Like it's not doing anything amazing. Like to me, Chat GPT is basically a Google search wrapped in user-friendly input and then user-friendly output. And the results are debatable. They definitely need to be verified. I told this story on TikTok. Maybe you guys haven't heard it. I've never owned a car, so I take buses everywhere, and I tried asking ChatGPT, what is the last bus from this location, and for a Friday, and it told me 11:30 p.m. Friday. I'm like, okay. I went and looked, and there was one at 12:30 a.m. Saturday, which any human would say, well, it's that one, right? And then you tell it, hey, there's one. Oh yeah, sorry about that. And it'll make mistakes all the time. When I was researching what city to move to, I asked for temperatures, average temperatures, and it for all the different cities, it gave me the same temperatures because it couldn't find them for individual cities. So I'm assuming went to Canada. It was like, all these cities are in Canada, ergo, that's the average temperature. And that's not really what I was hoping for. Now that's been, a year now. Stupid things like, my birthday's in February. If I stopped working in January 2020, how old was I? And it gave me the wrong answer. And then I told it, it's like January's before February. And it's like, oh yeah, sorry. but like you need to be right on the first try. Like if I'm doing the research, you're not helping me. Anyways, I'm sure this will eventually all get tweaked. I'm just saying that some of these companies are overpriced. That there's huge expectations very soon of the amazing stuff that this stuff is going to do, and I'm just saying, okay. Ryan says, how come Fairfax, FFH, and Berkshire are not in your portfolio? Very popular, steady growth. Not high enough. Dividend would be one. Fairfax, I never liked something about it. FFH. And Berkshire, I just could not bring myself to buy. Like I bought all sorts of other things. I don't like the amount of cash they have. From Berkshire, I didn't really want dividends. I mentioned earlier for tax efficiency, I'd rather have capital gains from foreign stocks rather than dividends because dividends would get taxed as salary in my non-registered stuff. But like Buffett should take something that gives them 15% return on investment and buy that rather than sit on 30% in cash and be getting what 3-4%. Like I don't really get that. Like he's waiting for that perfect pitch, but at the same time there's a opportunity cost. So that's Berkshire. FFH, what didn't I like about it? PE is 8, so that's not bad. I think maybe it was the yield, but I mean if it's appreciating, I can sell a couple of shares. It looks like it has some upside. I made the same mistake that I went into Parkland rather than Alimentation Couche-Tard. So Parkland paid a nice dividend, but the share price hasn't done anything amazing, while Alimentation Couche-Tard pays 1%, but it's had a really nice long run. Attempts to buy a Japanese company, notwithstanding, as I mentioned earlier, Japanese from personal experience and from statistics, they don't do anything with outsiders. They don't like immigration, and they're not going to have a Canadian company buy one of their crown jewels, if you will. Traveling in the Far East, Southeast Asia, like there's 7-Elevens everywhere. Like if you whatever you think in Canada, like triple that in Asia. Like people do their regular shopping in those places. Like there's not that many grocery stores. Anyway, I gave you more information than you wanted there, probably. Paul says, have you looked into Clean Technologies at all, I'm assuming? If so, do you think the stock has the potential to be giant like Waste Connection? So I've never heard of them. There's thousands of stocks. Like I actually do want to do something outside of stock research since I'm not getting paid for it, and all I want is not to go to work. It's funny, before I answer Paul's question, or I'll look up that stock. Aduro Clean. So that's ACT. When you're setting up your portfolio, make sure you have your financial goals in mind. Like you're not just trying to beat Warren Buffett. You're trying to accomplish some goals, whether it is saving for a vacation, saving for a house, saving for retirement, wanting financial independence, or just not wanting to work, which was sort of my thing. I wanted time. So like my portfolio is set up to be tax efficient and to kick off cash flow, but not covered call ETF kind of cash flow of 10, 11%, because my portfolio, not to brag, is big enough that I can live off of 4%. Not to mention that including taxes, I live off of 30,000. I'm going to be doing a YouTube video. I think December 28th is when I'll compile everything and kind of say this is what my years look like, and consider doing this kind of thing. So look for that. Subscribe if you like. But anyway, my point is that look for parts of your portfolio that are gonna do what your financial goals are. Like you don't just have to get into super volatile stuff that you think is going to go times 100 for you in the next 3 years, right? Because that one is as likely to go bankrupt as well. So you kind of have to right size it. Clean Technologies, it sounds like they manufacture of oils and specialty chemicals using waste plastics. So they're not collecting the waste, they're converting it. Hydrochemolytic technology to transform post-consumer polymer waste into resource for circular economy. Cool. Okay. I read strange statistics where like all the recycling basically is for naught, and then it all gets thrown out, or most of it gets thrown out anyways. So Paul, this wouldn't be my thing. Okay, it has a negative earnings per share. Let's see if they at least have positive cash flow. I like stuff that makes money. That's cash flow at the very minimum. They have negative cash flow as well. So yeah, they're losing money, which means at some point, if something doesn't change, which is rolling the dice. So like people are piling in on sentiment only. This sounds like a really good idea. The last 2 years, they've had minimal sales. How big is the company? Oh yeah, $250 million, like they're tiny. So like you're getting in on the ground floor. If it works out and they survive, maybe this will be great. Also, no economic moat. So somebody else, if they had enough money, could start up something very, very much the same. Richard, I don't know how to turn on captions. If you can tell me, I would love to. I don't want to disconnect everybody though. So if you, I mean, there's all sorts of icons, but I have no idea what they do. This is only like my third or fourth YouTube live. I've been doing them on TikTok for like 3 years now, but yeah, I don't know how to do it. If you can tell me, I would love to. Potential to be a giant like Waste Connections. It doesn't like Waste Connections. Is it actual garbage collection? Waste Connections. The thing is, everything has a potential. It's just like if they're not making money, then like they could be circling the drain. Waste Connections stock WCN. The search I gotta tell you on Qtrade. Whew. I typed in Waste Connections. It did not find it. I had to type in WCN. Yeah, they do collection, transfer, and disposal. And they are 65 billion market cap, so they are significant. Yeah, I mean, they could get that big. They don't do the same thing, was my point, Paul. But I get what you're saying. Yeah, if they make money and they're able to produce the oil and so on that they were doing from recycled materials, great. Conceptually it sounds great, which is why people pile money into them, but whether you can actually make it work is the question. Okay, Bibi says, Ethan, have a good night. Bibi says, hello, after 30% run up in US, are you rolling some of the profits into Canadian dividend payers as a protection against potential pullback or more efficient tax? Short answer is no. So I don't really time the market. I try to buy stuff that I could hold for decades and not have to do anything with. So like Amazon, Google, Microsoft, like those are going to be good companies for a long time to come, even though people said that about IBM and General Electric as well, and they ran into tough times. Okay, I'm gonna see if I get a menu here. Nope. Yeah, again, I don't know how to do the captions, so if anybody knows, let me know. So like trying to time the market, the US market has outperformed for a long time. It's been expensive for a long time. When enough people believe that it's too expensive, that's when there's going to be a correction. People start taking profits and so on. It could also keep grinding upwards and like, you know, and then so it grinds upwards and then there's going to be a correction here. Well, I still am better if I had all this run up. I'm still, you know, this much above. So just timing the market for me isn't a thing. If I don't like the company anymore and I don't think it's gonna do well from this point on, I sell it, take the US dollars without converting them. I have a weird thing not wanting to pay that 2%. And then I'll buy something else that I like, that I already have, most likely. I sort of have enough Canadian dividend payers already as well. And like I said, I don't want to pay the 2%. Stupid thing, but I keep it separated. Like my dividends, and again, I'll do a video. I'm very curious. I think my dividends from Canadian sources are going to be 120,000 for for 2024. So we'll see. And I'll do a video on the 28th with a summary. And you know, I'm already in a fairly high tax bracket, still not paying very much in taxes for those Canadian eligible dividends, but from this point on a marginal tax point of view, it's actually better to have capital gains. So I certainly wouldn't be trying to get more dividends. I would try to stay in the US, let's say, because like US is doing more choices anyways, let's say, rather than Canada, right? Canada, we basically have financials, including life cos. We've got energy and we've got materials. That's basically it. Like technology is what? Shopify, which is another one of those overpriced things for me. So yeah, I'm not doing that because I don't want to time the market. I certainly wouldn't try to get more Canadian dividends that way. And as far as pullback, yeah, but then it keeps going up, right? Like in 5 years, the market's going to be higher. And it's like, when is the pullback? So I watch it drop. Was today it? Was that the start? People start taking profits after a long run up, and you know, now it's just gonna spiral down as people is like, oh, now it's going down, let me take my profits. Like you don't know. So when do you sell off? After 2%, 5%, 10%? Now you're in a correction. I try to never sell off if I still believe in the company. Like timing the market just is not a thing for me. Anyways, I hope that helps. Ethan, okay, and Baby says, somehow for me it makes me feel better when profits are paid out as dividends than to leave it fully in growth. Personal choice. Yeah, I'm gonna do a video about that as well because somebody asked me the same thing. It's been a debate for a while. Grow stocks and then you sell a couple of shares when you need the money, or dividend payers. Okay. Actually, last week I did a comparison as well on the TikTok live, but I'll do a YouTube video because I wrote up an answer, so I might as well use it. So here's the thing: dividends aren't free. I'm sure, Bibby, you know that. You know, you have a $10 stock, pays $1 dividend. You now have a $9 stock and $1 in cash. When the dividend gets announced, the stock, if it wasn't moving otherwise, you would see it drop by the amount of the dividend. It's not free. It's not conjured out of thin air. Now, some people psychologically like cash flow without having to dig into the principal. It all works out the same. The net worth comes down of the company when you get the dividend. But if you have a bad year in the market, and I mean, you'll get one occasionally, 2022 was sort of the last one, it keeps people invested. And you really have to stay invested, like to jump out, maybe to the previous question, to jump in and out, like it just doesn't work. You know, it's a cliche. Unfortunately, it's coming from financial advisors, which have a vested interest in you staying invested, but time in the market, not timing the market, like studies indicate that. So dividends, you don't have control over them. Like maybe if you have a good year, you got a bonus at work or whatever, maybe you don't want the dividends. So you have actually better control. And I'm a dividend value investor, like no doubt. But if you want better control, you press the button to sell a couple of shares when you need the money, right? Capital gains are taxed preferentially, not as good as the Canadian eligible dividends, especially in the lower brackets in Canada, but they're still taxed preferentially, certainly better than salary or interest. So you get better control that way. arguably you invested the money into the company in the first place because you trust that company to give you a good income and good return on your investment. So why are you making them pay the dividend out to you? And then, you might reinvest it or you might go to the pub with it. So why not trust the company to take the profits and put them back into the company, hopefully getting you a good return on investment? So this is sort of a psychological, philosophical discussion. Like, maybe I'm with you as well. I'm sort of playing devil's advocate a little bit as well. Certainly in Canada, if it's eligible dividends, if it's American dividends or something, forget it, right? Those will get taxed heavily in non-registered accounts. Like usually you keep them in RSPs. And they have to be American traded in order to avoid the 15% withholding on the dividends of foreign dividend payers. But anyways, from a tax perspective, in the low tax brackets, Canadian eligible dividends can't be beat. Depending on your province, once you get over 100, 120 grand, the marginal tax rate is better for capital gains. At that point, it switches. But up until then, your average tax rate is still way lower than for Canadian eligible dividends than for capital gains. So from tax purposes, that way for sure. You don't have the control, as I mentioned. It all works out the same, right? Whether you get the money or the company gets the money and reinvests it, arguably they do a better job of reinvesting it than you do. The dividends come out of the net worth. So kind of an interesting way of looking at it. You also don't have to do one or the other. You can split the difference and have some growth and have some dividends, and dividends come in, and then if you need a little bit more money, you sell a couple of shares. So yeah. Bibi says IBM was a good example. They were flying high and growing today. All those gains are melted away. Yeah. I owned General Electric as well. They did nothing. Then when I sold them off, a little while after they took off. But I mean, pale shadow of what they used to be, right? Ryan says, take care, Lush. Merry Christmas to you and yours. Thanks for the insight. Yeah, you're welcome. Thanks for joining. It's been a while since we talked, even though arguably we didn't. It's been a bit of a monologue. Bibi says, if they would have paid a dividend, at least some of those gains would have remained with the investors and not wasted away. Well, I mean, the dividends or reinvestment, like it works out mathematically the same, right? So it maybe would have kept people invested psychologically, but ultimately, if the company is not making money or is having problems, like look at Boeing, like they just had problems, not with the income statement and balance sheet, but with planes crashing and so on. But investors will give companies some time to turn the ship around, but ultimately, if the fundamentals are degrading, like they're still going to sell out. So dividends will be Canadian. Yeah. Bibi says very few of the S&P 500 components from today are the same ones as they were 40 years ago. I don't know the stats on that. Like Microsoft's been around for a long time, right? Like maybe it wasn't in the S&P 500, but otherwise, yeah, they do change up. So like if I start hearing bad things about Google, yeah, eventually I'll sell it, right? I'm not gonna sit on it if it doesn't look like it's doing well. but like I'm not going to jump in and out on a weekly basis. I guess that's what I'm getting at. I'm afraid 30 years from now, Google and Amazon will be a memory. Yeah, I mean, we humans, as a fallacy, we make the assumption whatever's happening today is going to keep happening, and things do change over time. It might be very slow, and you don't even notice until it's it's too late, arguably. They might take different forms, like the companies will consolidate with other companies and so on. Like, who knows? But I mean, you don't have to make that decision now. You don't have to say, well, I think Google's going to be gone in 20 years, so I might as well sell it now. So Jax says, hello, Jax. Santara says, what's your opinion on HQU? Since we all invest for the long run with expectations of 10 to 12% gain, would it make sense to invest in something that will double against the NASDAQ currently in XQQ? Okay. HQU. Beta Pro. Okay. And you're in some derivative of the triple Q. So the NASDAQ 100 XQQ. That's the Canadian hedged. Okay. Cool. Yeah, so let's see. So it's the daily bull ETF. Well, over the last 10 years, it's done 26%. So I've never owned one. Like, to me, NASDAQ 100 is adventurous enough, frankly. Like, it's more volatile than the S&P 500 and so on. I've never felt the need for it to be multiplied times 2. The other thing is, let's see if I can remember it. The times 2, so it's a multiplier, but it's not done through borrowing and leverage. It's actually done through options. And the thing is, it's not meant to be held for a long period of time. They, like, if it has a good record, great, but if it goes down, like I'm not gonna get this right. So let's pretend NASDAQ loses 10%. So the Beta Pro NASDAQ times 2 would lose 20%. But the NASDAQ to get back to even where you bought it, if it lost 10% now, it has to make 11% in order to come back, right? Because it went from 100 to 90, and now you need to make 10, which is 11% of 90. But with the multiplier, the numbers start to go wrong, and it loses that times 2 both to the upside and to the downside. So if it's going against you, like, it can really dive. So basically, just to finish my example, if NASDAQ lost 10, this thing would have lost 20. So the NASDAQ gets 11, so this thing would get 22, would come back 22%, and 22% of 80 is basically 98%. So it doesn't, the math doesn't quite work the same with these multipliers. Okay. So what I did is NASDAQ lost 10, this thing lost 20. In order for the NASDAQ to come back, it would need to get 11. If this thing gets 22, that only gets you back to 97% or 98%. And of course, the more movement, like, eventually it just gets off off the ×2 thing. It can work for you or against you. This particular one is doing okay by the looks of it over a 10-year period. So this thing did over a 10-year period did 26 per year, and NASDAQ, I'm just going to do triple Q. And the NASDAQ did, oh, what am I looking at here? Okay, I'm going to do the XQQ that you're doing, which you get the currency's taken out, so maybe I'll be fair. Then now it's doing 16, right? So it's not, the other one wasn't twice. The Beta Pro, whatever it was. So it still gets you more by the looks of it. It just doesn't actually do the ×2. So just be aware that most people seem to avoid holding it for longer periods of time. And like I said, to me, the NASDAQ 100 was interesting enough. If you want more excitement, like look at something like Russell 2000 or something like that, which is small and medium caps, and then that will have even more volatility than the big companies in the NASDAQ. Also do note NASDAQ, I think, is like 50% technology. Everybody thinks it's all technology, but you get stuff like Lululemon and Pepsi on the NASDAQ, which I'm sure use technology, just are not technology companies. Bibi says, if you are able to double the NASDAQ consistently, there are some investment banks that will pay millions in salary. It's true. People with PhD thesis that claim they can get an extra 0.1% will get hired by investment banks. Yeah, it's extra volatility with the Betamax, Beta Pro, whatever it was. Sorry, Betamax, I think is a videotape for my youth. Yeah, San, you're welcome. No problem. Yeah, so like when people ask me how should I start investing, I basically say do ETFs, don't do individual stocks. That if you don't know how to analyze them, even if I say, oh, I like this one, and you buy it, you don't know how to check in to get out of it if it's not doing whatever it's supposed to be doing anymore, right? So like even if somebody tells you what to buy, you're not able to maintain your portfolio. So ETFs, one that follows the TSX for Canadian, right? And the percentages are up to you. Another one that follows the S&P 500 to cover the US. Reason I'm bringing this up is if you want to spice up your life a little bit, NASDAQ 100 will, over a long period of time, will give you better returns, but also more volatility. But if you have a long period of time and you don't mind the ups and downs, NASDAQ, I would say arguably will do better. And I think technology in the end is going to do quite well. And then do a third one for developed markets, so outside of North America. It's called, one of the indexes I use on my ETFs is EFI, so Europe, Australasia, Far East, where Far East is Japan, basically. And then a fourth one for emerging markets. Maybe it's a fifth one if you also included NASDAQ and you didn't take out the S&P 500, but there is overlap between NASDAQ 100 and the S&P 500. Tesla trades on both, because Tesla trades on the NASDAQ, but it's part of the S&P 500 index. S&P 500 index is an index. It's contains both New York Stock Exchange and what's on the NASDAQ. NASDAQ is an exchange. NASDAQ 100 is an index. And so, and then do a fourth one, fifth one for emerging markets. If you want less excitement in your life, do a bond ETF for small percentage, and that's your piggy bank. You keep putting money into that on a monthly basis, right? And then do this on a monthly basis, whatever the percentages are. If you have $1,000 and you decided to be 10% in TSX, put $100 into the TSX ETF and so on. And then one day when all the stock markets are correcting, hopefully the bonds will hold out, that it won't be like 2022. And that's when you crack open a piggy bank and you use that money to buy more of the cheap stocks. Guaranteed the stocks won't be as cheap as they were 10 years ago. So start investing today for all of you, all 9 of you that are on. Baby says, for beginners, anything that promises more than 4 to 5% ongoing, start being afraid. I think we should get high single digits in the stock market. Like, I wouldn't promise anybody 12, but 4 to 5% would be bonds. 6 to 7, I would say balanced funds. I would say Canada's underperformed the last 15 years, so maybe 7, 8. And S&P 500, you should be close to double digits on the average, right? You could get a 20% year, you could get a minus 10 year. So Paul says, what's your take on Canadian REITs for 2025? I don't own any. The last one I had was Granite. I would really check in what they hold, because I'm on board with anything residential. People are always going to have to live somewhere, so apartment REITs and so on. Data centers, definitely industrial warehouses, all that stuff is good. The question marks for me are still office space and malls, basically. So office space, whether people are going to go back to the office 100% is still a question mark. Like, I know in Calgary that there's still a lot of vacancies, so that's tough. If it's good location, it'll be leased. If it's not a good location or it's a bad building, so like A, maybe B properties, but once you get into C properties, and when it comes to retail, if it's a mall in downtown, it'll be fine. If it's a mini mall out in the burbs, that might get converted to a data center. So, and by the way, I also saw a seminar on this. Converting office space into residential is just a non-starter. Just the way it's configured, you basically have common bathrooms, and then one shower downstairs. Like, you would have to dig up all the walls and redo everything. So that's not going to be a thing. It would be cheaper to tear the building down and build it up as residential from scratch, I'm told. So yeah, Paul, I don't have any favorites to tell you. If you want me to look at a couple, I can. But as a general theory, and this has been an ongoing theme since COVID, which has sort of caused the speeding up of all of these trends where people don't go to the office all the time and people shop online. Even though then I saw something about young people now wanting to go to malls, while older people, like even I'm shopping online, my God. That might be because I can't get anywhere all that easily in the snow. I'm like, yeah, deliver, sure. Buy minimum of $35. Absolutely, I'll find something just so you guys deliver, so I don't have to go anywhere. Anyways, I'm joking. Yeah, so COVID basically sped up that whole trend. if you're working from home 1 or 2 days, then you still need your own desk. I remember even back in like late 2010s, I remember sharing a desk with somebody where I was there, you know, Monday, Wednesday, Friday, and he was there Tuesday, Thursday. There was a whiteboard and we played tic-tac-toe. I started the game, and then when I came back, he made a move. And good thing it wasn't chess where you'd spend half a day contemplating the next move, that it was just tic-tac-toe. Anyways, Baby says for IBKR, yes, I do use interactive brokers. I remember you saying that you got margin called at some point. I didn't get it called. It just started getting, like I had maxed it out or close to it, and then the stocks went down a little bit and it started heading towards I don't know why they do it, but interactive brokers, they give you like all these numbers. I'm like, which of these numbers am I looking at and what should it be above? And they said, look at this number, it needs to be above 30,000. I could not tell you what number it is today. The doggo finally started snoring, thankfully, as opposed to destroying the house or attacking me. She bites she bites my hands. Licking, I don't mind. Biting, I draw the line at. Hi, sweetie. Um, anyways, were you able to transfer money in the account in time not to get sold out of positions? Yeah, I was. The funny thing was, even if you initiated the transfer of extra money, they're like, yeah, you're underneath 30,000 here. We're selling stuff off for you because I'm like, the money's coming. And then too bad. So it was kind of cutthroat. I know margin call that it can be pretty rough. What I did is when I first opened up Interactive Brokers, I had some money sitting on my home equity line of credit when I was in Surrey in a condo, and that had at least 2% higher interest rate. So I'm like, hey, I got a margin with a lower interest rate. Why don't we pay off the HELOC? And that's when the stocks went down. So I had to start transferring money from the HELOC back into Interactive Brokers, and it always takes like 5 days before they actually recognize it, even though it leaves your account immediately. And like in those 5 days, like I was like, are they going to start selling stuff off for me? Or I mean, if they said yes, then I would have chosen what to sell, right? I wouldn't let them do eeny, meeny, miny, mo. But anyways, so yeah, it I don't want to cut it that close anymore. Basically, like that didn't feel great. RG Titan says, hello everyone. Hello RG. BB says, for me, sometimes it takes days for transfer money in, even if I have the cash. I cannot see how the transfer will clear in time. Yeah, like Qtrade is really quick. They accept it right away. Wealthsimple started doing the same thing. Is that transfer's been initiated, and they say you've got the credit. Maybe it's just me because I have 600,000 with them, but they seem to be a lot nicer about it. But Interactive Brokers was a little harsh. That's their policy. It's fine, but where'd the dog go? She disappears and it's quiet, and then I listen for sounds of her chewing. Yeah, RG says, are there crypto ETFs? Yeah, there are. In Canada, we've had them for a while. This is BT. I should come up with something. Yeah, in Canada, like for 2-3 years, we had Bitcoin ETFs. I know in the US they came up with them fairly recently, which gave it legitimacy, which I'm arguing is not warranted, but to each their own. Yeah, just Evolve Bitcoin ETFs on the TSX is EBIT. So Echo, Bravo, Indigo, Tango. There's one that looks like it's 3 times maybe. Jesus. So that's Bravo, Tango, Charlie. What's Q? Query? I think that's right. So yeah, I think if you just Google them, I think the most common one is BTCC, Bravo, Tango, Charlie, Charlie, all on the TSX. In the US, they got the BlackRock one, which I think is just BIT on the New York Stock Exchange. So, not my thing, but I think it'll eventually go to zero, but we'll see. Paul says currently hold VRE ETF, Ryokan, and PLZ. Sure. Let's see. VRE. So that's Vanguard, FTSE Canadian Cap. Oh, you hold a REIT index. Okay. I mean, that might be your one-stop shop, right? You don't control what they hold, but I'll at least be diversified if you don't enjoy doing it. So they hold First Service, Colliers, Canadian Apartment REIT, Ryokan, which you said you hold as well. Granite, which Chartwell Retirement, yeah. Choice Properties, First Capital, Dream Industrial. So yeah, I mean, depends on the percentages. Where'd the dog go? Excuse me. Hi, baby. Hi. She has kind of a little space between ottomans where she climbed into. So yeah, I mean that one's fine. What's the yield is only 2.9. Hey, interesting. It looks like it's coming off too. If you want REITs, Canadian REITs, then that looks good. Ryokan. Yep. Here we are. REI is the ticker. Yeah, same thing. It's coming off. Nice yield though, 6%. Let's see if it's covered by cash. $1.11, and the cash flow is $1.54. So it is covered by cash, but they're pretty much paying out everything. Mixed use urban, yeah, so they're retail, hey? Retail focused properties. Yeah, yeah, they just tanked with COVID and they never got back to where they were. So it kind of feels like they've been trending down for years, probably based on what I was saying. And you have, it looks like you're really just getting the yield from them. And then PLZ. Plaza Retail. Okay, so I mean, depending on the percentages that you're holding, you're really really hitting the retail. I'd be, yeah, that one's had the same trend down. You would think the lower interest rates would help them, by the way, which I find kind of interesting that it's trending downwards. Yield is 7.9 on Plaza Retail and 28 cents, and their cash flow is 37 cents. So they're much like the other one, are paying out pretty much everything. Not that much debt though. Interesting. PE is 30. That feels high. The price has come off, and I'm assuming earnings have come down more. Oh yay! So yeah, I mean, yeah, that one's up to you. But you're definitely enjoying the retail stuff, which, like I said, is still a little bit tough. BB says, every time I swear to myself that Tesla cannot go any higher, Elon cozies up to the next president and stock explodes again. Yeah, like it eventually comes down to fundamentals, right? Um, Tesla is a bit of both the stock and the car is a bit of a cult, I think. Um, like people just believe in it because they believe in it. The fundamentals definitely, like I looked up, I think it had 130 something price to earnings. Like I'm just not willing to pay that. When they came down to about 40 at one point, and I probably should have bought it. I was looking at it, but like that's in the 40s is sort of my limit. And it is what it is. There's other ways to make money. Then Baby says, where are you looking for stock analysis? TMX Money, Simply Wall Street, or something else? I'm just using Qtrade, my brokerage, or one of the three. Wealthsimple has absolutely nothing. Uh, Qtrade was my first brokerage, and they're unfortunately still the one that can take both my corporation and mutual funds, which I do have. Um, so I'm sticking with them. Wealthsimple won't take mutual funds, and nor my corporate stocks. Interactive brokers cannot do mutual funds. They would take my corporation and the stocks. And I don't want to get a fourth one for like Quest Trade or something. But the thing is, there's decent information, and I guess I'm just used to it as well. But there's decent information on Qtrade, but they have Morningstar and Desjardins research, while Simple has nothing. So then people have to go, I'm assuming, Yahoo Finance or something. So yeah, just using the brokerage. Bibi says Tesla and fundamentals belong in different universes. Yeah, that is true. There's tons of stuff that's overpriced, and usually it needs to catch up with its earnings to the high valuations, or it nosedives. There's so much stuff out there that doesn't make a profit, doesn't have cash flow, and in worst cases doesn't even have sales, and yet people are bidding on it because they think it's the next greatest thing, and it's just speculating, and that's just not something I need to do at this point in my career. I'd rather buy, bank stocks, and I know they'll pay the dividends, and all's well with the world. um Su- Suki Suk Jivan says, sorry, just joined now. What happened to the market? Yeah, you're late. Uh, yeah, what happened to the market is we had the U.S. Fed basically say we're not going to cut interest rates as many times as we thought. The market had priced in 4 cuts in 2025, and they came out and said it'll be twice. Sort of an odd thing to specify a number. Usually they just say they're data dependent, but the market took it badly, and Canada, because we're so closely tied to the U.S., took a header as well. 2.5% down. It's not end of the world. I looked at. I'm going to bring it up again. I looked at the futures, which theoretically are what the markets will open. Where are you? Will open up tomorrow at, and everything was in the green last time I looked, which was a couple hours ago. But let's see. Dow Jones is showing green, so is the S&P 500. Nasdaq is now a little bit in the red, tiny bit, and the Russell 2000 is tiny bit in the red. So it looks like it'll open flat, but I mean, who knows what will happen in the next few hours. So, Yeah, market fluctuated. Bibi is correct. What you think if it was normal reaction? It's a predictable reaction. The 0.25% cut was expected, so that was nothing. That was already priced in. It's always during the press conference afterwards. That's where you get, Mr. Powell coming out and answering questions, all in a very measured way. But for some reason, instead of saying, yeah, we'll just see what inflation is doing and what the economy is doing, he said they're expecting to cut twice. Inflation's come off. They're good there. They don't need to goose the economy because their unemployment rate is still in the fours. So, he's like, well, we don't need to cut as much. And that goes to the bottom line of all the companies and to the bottom line of consumers as well, who are probably borrowing to consume. So yeah, it didn't drop 15% like it dropped 2.5%. We'll see what happens tomorrow. But Suk Jivan, I'm sorry, says, what's happening to Bell? Is it going to be the new BlackBerry? I'm still buying in. I'm looking back, I'm overpaying. I'm buying on the way down, and I've definitely overpaid on some of the earlier ones. But you tell me where the bottom is. They're not going to go bankrupt. They're still profitable, right? At worst, what will happen will be they might be bought out, 70 cents on the dollar kind of a thing. They were in debt. Then they sold that I think it was a corporation. I didn't look. I thought it was a soccer team at one point, or like the Toronto soccer team. And then it had other sports teams in there as well. I think selling that was a good idea. Some experts disagree that it was like a crown jewel, and I'm just like, it was just for advertising. It wasn't a core holding. So they sold it, and they told us that they were gonna pay off debt, which would have been boring, would have helped them. They also told us they were not going to increase the dividend in 2025, which is fine. Their dividend is high enough. But during that time, we found out later, we stockholders said that they're buying a fiber optics cable company in the US, basically to get customers. And they're going to pay a whole bunch of cash and more debt. So not only that they didn't pay off debt, they're going to pay more or have more. To me, I can see why they did it. It probably wouldn't be the safe move, but the thing is, if they don't get more customers, they're just going to stay flat, because in Canada, there's no growth for any of the telcos, any of them, because we're not getting increasing population. The immigration has sort of petered off, and they rolled the dice, they took a risk, and they basically bought customers, and not for a very cheap price. It was like 14 times EBITDA, which it seems fairly expensive. They're going to have to put more money into upgrading their technology as well. They don't really know anything about the US market, different animal. To them, it might be the only way to grow their way out of debt. And it just like that was their one shot. I think they just jumped on the first thing that they could find, which means they didn't get a great price. I'm not their CEO. But the thing is, they would have kept possibly circling the drain if they didn't go out and take this radical step. So the dog's snoring. Anyways, Bibi says I'm chipping into Bell as well. My outlook for comeback is around 5 years. I'm with you on that one. Barring any swings in the economy, should come back on track. I agree. It again, going back to the buying of customers, like to get customers away from Rogers or from TELUS is really expensive. So arguably, they might have gotten a deal that way from Ziply. But I doubt stock price will go fully back. Well, I don't have a huge amount. It's increasing, but I mean, I don't have a huge amount. Sugjivan says Canadian government bonds, good choice to buy this time. I probably, I'm not a bond guy. I'm the wrong guy to ask about bonds. I think so. With especially with interest rates still heading down in Canada. Over the long run, bonds do not outperform stocks, especially not government bonds. If they were, high yield or junk bonds, they would. The other thing is, for me, bonds are not tax efficient because of the interest they pay in my non-registered accounts. I kind of avoid bonds. I do have a few balanced funds which contain bonds, but they're mutual funds and they're actively managed. I let somebody else do that. And I think it's in my RRSP for the most part. So yeah, if you want safety and you want some income, especially if it's in a TFSA or an RRSP, arguably, then that's fine. It's just not the way I usually go. Wow, Parisorium Film Festival. How do I find out how much get back for a tax refund in 2025? I think you have to do your taxes. I don't think there's any other way of doing that. Baby says, why buy bonds if you can get Canadian banks? They pay more often, and even wars did not stop their dividend. It's true. The government bonds aren't going to stop paying either. Like, government can print more money, tax more. Dog is snoring. I sort of wanted her to stay awake so she would sleep during the night, but it is what it is. She wakes me up like 3 or 4 times during a given night, so yeah, Canadian banks, like like even TD, like even if they're not growing, they're just gonna keep making a profit and keep paying that dividend. So they are tax efficient in non-registered accounts. If the bonds are in a TFSA or RRSP, then it's fine, doesn't matter. They, I mean, I don't know what government bonds you're thinking, but they would pay more. I would say the dividends would be higher, but the share price can certainly fluctuate. While with bonds, it's especially with interest rates going down, you're not going to get a capital loss. Rand says, why is GSY going down so much? I haven't really, I don't think they've announced anything. The lower interest rates might be seen as a precursor to people going to regular lenders and or GSY making less money because they can't charge the high interest rates or as high interest rates anymore. Yeah, they've come off some from 200 and change to 160. I mean, I'm not really buying anymore because I'm holding, like, they're my first or second biggest single stock. Manulife would be the other one. I mean, they might stop, just eyeballing it, they might stop at around 100 because that's where we were for 2022 and 2023. It sort of did that around $100. So it might go down some more. But yeah, I would think it's the interest rates. Bibi says, what I mean is Canadian bank dividends are usually higher than coupon on bonds. Yeah, for sure. Oh, the government bonds anyways, like if you're getting corporate or like investment grade, because the risk is higher that you're not going to get your principal back, then so will the interest. So government bonds pay a couple of percent, if that. The corporations, depending on the size of the corp, will pay more. And if it's junk bonds, or if you go, Venezuela to pick the worst case scenario, then they'll pay a lot, but then you might not get your money back. Sugjivan says, I am not planning long term. Banks might tank for sure with any market shock, but bonds might be safer in that scenario. Yeah, I mean, bonds are sort of the counter to the volatility of stocks. Over the long run, they are a drag on performance. You don't know what the stock market is going to do. It could keep grinding upwards, or we could get a 10% correction that started with today. So, I mean, maybe people will think, hey, we've had a long run up, it's time to take some profits. So yeah, you just don't know. The thing is, over a long period of time, the stock market outperforms the bonds. That's sort of how I work, and timing the market is really tough. So trying to say, okay, well, I'm just gonna. I had one coworker. I told the story on the TikTok lives, but I had one coworker who, the first time Trump was elected, prior to the election itself, he sold out a meager portfolio, and he just went straight to gold because he thought the stock market would tank. And Trump got elected, and the markets went up. I think the markets like the certainty anyways. I think we kind of saw that in this election as well. And Republicans are supposed to be a business party. Stock markets actually underperform slightly under Republicans compared to the Democrats, but it doesn't really matter. So yeah, he just went to gold, and he missed out. And yeah, I'm just like don't time the market. Like, you're going to get it wrong most of the time. Just stay invested, have a portfolio you're comfortable with that's doing what your financial goals are. If you want cash flow, maybe have some dividend payers, or be willing to sell a couple of shares. Like the US markets have been overpriced for a long time, outperforming for a long time, and they keep doing it. I think the TSX beat them, I think, in 2022, I want to say. The S&P 500 dropped more than the TSX. But other than that, it keeps grinding upwards. So you tell me where it's going to come down, and then where is the bottom. Like, you have to be right twice, and it just my personal, and nobody take actions based on this, but my personal thing is I'm always fully invested. I have minimal cash. Like, I got a couple of grand, and some of that is earmarked for investment already, but like I just don't hold cash. I'm always fully invested because I have dividends coming in all the time, and at worst I have a home equity line of credit for emergencies, and I don't really know what that would be, frankly. Anyway, my thing is, if the market drops 20%, then I will use that HELOC to invest. It won't be a significant amount, like my portfolio is going to lose a lot. And then I'll take a little bit of an advantage by borrowing to invest. But I do that after the fact, after it's dropped, and like, to sit in cash or in bonds as was suggested is just not really what will outperform in the long run. But I mean, you do you, right? Like, you have to be comfortable, and your risk profile has to be the way you are comfortable. I'm just telling you, bonds underperform over the long run, but if you time it right, it'll work out. So, anyways, I think BB says, when you reach 10 million, will you spend 1 million for Antibes yacht tour? I might buy a yacht. I used to, back in grades 8, 9, and 10, two of my teachers had sailboats, so we used to do trips along Vancouver Island. Something I've been sort of thinking about, but not. When I got the 6 million net worth, I was telling myself I should take myself out to dinner, do something, and just never ended up doing anything. And now I'm at 6.2 and still not doing anything. It's just not my thing. I'm not a traveler. Last travel was 3 months in 2023, in starting in Japan and ending up in Singapore. I don't feel I need to do that again. And I spent $10,000. Maybe one of the reasons I didn't enjoy it as much is because I spent $10,000 in 3 months, which is technically less than I would have spent here. Anyways, Bibi says, if so, invite me since I gave you the idea. Yeah. Maybe a cruise ship or something. But I'm also like on the keto diet, so I can't eat stuff, and I'm just too frugal. Like, I don't enjoy spending money. It's actually a bit of a problem, but anyway, it is what it is. Franco says Trump keeps tweeting about Canada becoming the 51st state. Well, Trump's an idiot. Could this actually happen? No. What do you think impact our economy? Well, yeah, it would impact everything, but it would have to be, like, even if all the citizens got together and said we want to become 51st state, like, there's complications on both sides of the border, like some sort of a referendum like we had in the 90s with Quebec wanting to separate. I don't know if you could do that, but I don't think most Canadians would actually want to become 51st state. So they would have to take us over militarily, which I'm hoping at least Britain would say something. Antibes is south of France. Okay. R3 Revolution. What did you say? Okay. I don't know. R3 Revolution says, what's the point of money if you're too frugal to spend? You know what? Like, we have this discussion every so often. I did a YouTube video about, learning to spend, because somebody who's retired already, like in their 60s, it sounded like, was asking me the same thing. It's like, I don't know what to spend the money on. Like, I don't have kids, not really close with family, and they have their own money. So, like, I just don't want to go back to work. That's my goal of my whole thing. With 6 million net worth, that's very unlikely, right? Like, the whole country would be going to heck in a handbasket if I have to go back to work. But Like I'm comfortable with who I am. I'm comfortable with my life. Um, I went grocery shopping on my bicycle in the snow and I fell, so I didn't enjoy that. So, but then I look at cars and it's like, oh, I'd have to rearrange my garage or park it outside and blow the snow off of it and keep the engine running and or have a block heater. This way, I'm the only guy on the bike. I'm like the the class clown, except hopefully in a more positive way. I broke a pedal on the bike, which I've got like three spares of, so that was the main thing, and my knee stopped hurting recently. Um, like I don't need any more. Like I don't yeah, like I don't need massages. I don't need whatever. I think in Edmonton a car would make my life easier, but like I said I promised myself I would try one winter without a car. Um, so yeah, it's I came Eastern European. I was born in Prague, and we immigrated to Canada when I was a kid, and we came with virtually nothing. So my parents were frugal, and that's all I got from them. I wish they taught me how to invest, but I started early enough that I don't think it mattered. Um, yeah, I'm accumulating for charity at this point, right? My goal is um, when I leave this mortal coil, I anything that's non-taxable, like primary residence or TFSA, is going to go to the last person that was nice to me, and anything that's taxable is going to go to charities. There's going to be, I think, some tax because of that alternate minimum tax thing that changed recently. Maybe conservatives will change it back. Um, yeah, that's my plan. I'm living fine. Like I'm not really wanting for anything, and to spend money on stuff I don't need, it seems counter to my nature. Anyways, but Bibi says it's not even possible for Alberta to separate alone. U.S. taking us over. Yeah, it would be a military thing. I because of the amount of trade, I think all it would take is for them to stop shipping stuff to us, and I think we would raise the white flag on our own, like they wouldn't even have to invade. Um, it's just Trump. He's just a moron. Um, like he's alienating allies and like the whole onshoring and like he's not going to stop global trade. Interestingly enough, global trade is still increasing. Like the news media makes it sound like there's barbed wire fences at the borders. It's just media again. It's it's just that he's slowing down the rate of global trade increases. Just to be clear, like global trade is still increasing because you go with it efficiency. Like that's economics 101. Where is it cheapest to make? Like even add in the shipping costs. If it's still cheaper, that's where it's going to get made, right? Like the tariffs, I think, are just saber rattling. I hope it would affect us worse than the US, but it would definitely be inflationary, and they would raise the interest rates again, which he doesn't like. So maybe somebody will tell him. Okay, Bibi says, trust me, it's like blue cheese. You think you won't like it, but if you try a Ford Raptor, oh, you're the Ford Raptor guy. Okay, that's right. You will never go back. I haven't had access to a car since my ex left, which would have been 2009. So for 15 solid years. Um, I through Wealthsimple I can get like an Uber membership. Um, I still need to figure out transit in Edmonton. Like I'm okay. Like I sort of feel bad driving a car by myself just because of all the pollution. Nobody else seems to mind, but um, plus for me it's a health thing. Like I think once you get a car and you stop being active, like that could just start feeding itself and like I don't want that. I want to run 3 times a week. I want to go everywhere by bike that I can. And where I live, everything is close. Like the vet for the dog is 1 kilometer away. Like I picked a great location. Um, anyway, can you at least buy a gold pedal as a replacement? um, Revolution says you mean 6 million CAD. Yeah, if you're interested, look at my portfolio and my net worth. It's all on CanadianMoneyTalk.ca. About 600,000 is in US dollars, but I'm using it at par. So actually my net worth is higher than the 6.1. If you were to multiply it by 1.3, 1.4, the 600 million. Im, Imnets of Oots. Canada is gone now. Interesting. Because Trump said so. Give your money to Alex Jones. I don't know who Alex Jones is. Bibi says, are you afraid of becoming a target since you're open about your net worth? No. When I was traveling, one of my friends tried to, I don't know why, but he tried to scare me with so many things. You're going to get kidnapped. Somebody is gonna sick the police on you and they're corrupt, so you're gonna go to jail, like all of these things, and then absolutely nothing happened. Never did I ever feel in danger of any kind. And that was when I was traveling in a in an emerging market country. Food was great, but I certainly don't feel in any sort of danger in Canada. Bigfooter says, do you think we're in the start of a bear market or just a slight correction? One day does not a trend make, and there's a reason for that. Is the Jay Powell scaring the markets, saying we're only going to cut 2 more times in 2025, not the 4 times you guys were thinking. So like we know why, because four cuts have been priced in. I'm guessing. We also had a long run up, all-time highs, so people taking a little bit of profit. It could very well start a cycle where like people's like, okay, market's going down, I'm gonna take my profits, and then that causes it to go down some more. Nobody knows. I can't tell you what the market's gonna do tomorrow, next month. Next year, I would be willing to bet that it'll be higher in 5 years more confidently. In 10 years, I would be willing to bet a lot that the market will be higher than today. But a correction, by the way, is down 10, right? We were down 2.5% today, so I'm not really seeing it as a as a tragedy at this point, right? Interest rates are lower than they used to be. It's a benefit to anybody who has loans, which would be pretty much everybody. So, savings accounts aren't paying out as much, encouraging people to invest. Maybe they will do that. I got $1,000 sitting in Wealthsimple, which I'm like, that's hardly worth entering the transaction, but maybe we'll take a shot. The thing is, I only have so much cash, and I said I would only borrow if the market was down 20%, like a bear market. So it's like, well, where's the bottom? Like, when do I put my $1,000 in? So it's kind of fun to think about. Bigfooter says, do you think BCE is selling off for tax losses? Time to nibble. Yeah, it could be. Not much is down, right? Most stuff is up for the year. There's a few exceptions. Toronto Dominion, you could argue the same thing, that it's being sold because it's come down, that it's being sold for tax losses, but it's holding up a lot better than BCE. Yeah, it could be. Like I've been nibbling at BCE, but it turns out I've overpaid quite a bit earlier on, because like where's the bottom, right? That's the tough part. So, anyways, I've been at it for 3 hours, ladies and gentlemen. So I'm gonna call for any last questions. There's only 3 of you on. I find the YouTube ones so much more relaxing. The TikTok ones, I just get so far behind and it becomes stressful for me and annoying to the people needing to wait for 20 minutes to get an answer. So this is a lot nicer. I'm going to do another one in 2 weeks. Next week would have been TikTok, but that's Christmas Day, so I'm going to skip that one. So this YouTube one is going to be the next one. Like, subscribe, all that good stuff. Bibby says, is Q-Trade market data showing big institution investors selling off TD? You know what? That might be in one of the tabs that I don't go to. Let's see if they have that. Performance, returns, valuations, price history, shareholders. Let's see. The other thing is whether they have it over time or not. No, actually. So current quarter. No, interestingly enough. There's the highest owned by institutions is the current quarter. Mutual funds is sort of flat. Institutions. Yeah, total shares held is the highest ever. Well, no, 1 year ago was higher. I'm sorry, but otherwise, this is the second highest total shares held, and they're not selling very many either. Huh. This is a tab I haven't been to. See, this is what you miss out with Wealthsimple. Yeah, you don't pay the, what is it, $8.75, or for me $6.95. And investment advisors own by far the biggest percent. Mutual fund managers are second, brokers are third. Interesting. Okay. Bigfooter says good night. You have yourself a good night as well. Bibby says thanks for your input. You're welcome. And then Bibby says, okay, so a combination of smaller investors and some institutions are selling out of. So if I look at shares sold, institutions are the lowest. The most shares sold were 5 years ago for whatever reason, and then it's more or less come down. And then current quarter, they're not selling at all, institutions. Mutual funds, same. Like right now, you should be buying, right? TD. Like it might bounce around the bottom around, 72, 73. It was down there when the scandal first broke as well in June. I still don't really see the terrifying thing about Toronto Dominion. Like, they're going to get their act together. The regulators sort of going to watch them for 4 years, but much earlier than that, fingers crossed. I mean, I have no idea. They're going to let them buy in the US again. I don't know why they don't buy somewhere else, but whatever. Yeah. Okay. Any last questions? Otherwise, I'm gonna call it a night. See what the damage the dog did. Okay, so I will do this again in 2 weeks, same time, Wednesday again. Yeah, you're welcome. Have a good night, everybody.